Alright guys, we are back again this week with another trade breakdown, and I'm going to be going over how to anticipate price delivery on a buy that I took on GBPCAD, and it will be a market maker buy model. So before getting into the charts, I want to show you guys what the economic calendar looked like for the week. And this week for the CAD crosses, we had CPI on Tuesday. So I wanted to prioritize the CAD crosses because this was going to be our volatility injection into the marketplace for the week of the 15th to the 19th. So in order to catch this energetic move, I wanted to position myself to see if an opportunity was presented on either Monday or Tuesday before news release. Now, moving on to what the CAD futures actually looked like in regards to their price action. Because if we're looking at anything that's XXX CAD, we want to see bearish delivery on CAD futures if we're looking for a bullish draw on those CAD crosses. So the first thing that I noticed was the monthly internal to external range draw on liquidity for the CAD futures. So if CAD futures are dropping lower, then XXX CAD crosses will be bullish. Now, getting into the actual charts, we have GBPCAD on the left and EuroCAD on the right. Now, monitor price within this area on both charts and mark off the significant highs and lows and seek for the annotations of SMT and higher time frame key levels before I show my annotations on the next slide. Now, with my annotations marked off here, if you guys watched my previous video on the explanation of SMT divergence and how crucial it is in regards to looking for your positions to go either long or short. Now, if you're looking to go long in a bullish market, since we have bearish CAD futures, I'm looking for a bullish draw on these XXX CAD crosses. Notice the corresponding lows on GBPCAD compared to EuroCAD. What do you notice here? I noticed that GBPCAD has been making higher lows and higher lows inside of that higher time frame key level, that daily internal range liquidity pool. Now look at the corresponding lows on EuroCAD, lower low and lower low. And if you look closely here inside of that higher time frame key level, what do you see? We see a run on Friday's low on Monday, and GBPCAD failed to take out Friday's low. So I'm already indicating myself that there's strength out of GBPCAD compared to EuroCAD. So if I'm looking to take a long position, I'm going to position myself long on the pound CAD compared to EuroCAD. Now, moving to the hourly chart, because we're using time frame alignment, doing daily key level to an hourly market maker buy model. So do the same thing that you did on the daily, do it on the hourly. Mark off significant lows or highs that you notice that can be used as potential annotations for framing a position to go long. Now, what I had marked off here was the daily key level. This is the internal range liquidity pool on pound CAD, and here's it for EuroCAD. And this is Monday's price action. Now, what do you notice in what we said before? We had EuroCAD running the lows from Friday, and GBPCAD failed to run those lows from Friday. So this is our strength leader. So again, my focus is going to be longing this pair. But also notice something else. What do we have here? This can be labeled as our long-term low, our initial tag of that daily internal range liquidity pool. Now, if you've seen my other videos in regards to advanced market structure, if this is a long-term low, to the right, we have short-term low here, short-term low here, short-term low here. What happens when we create the SMT divergence with EuroCAD? We sweep these short-term lows, labeling this as what? A potential intermediate term low. So my first initial entry to go long was here when we ran the buy stops, creating the intermediate term low, and EuroCAD ran Friday's low. And looking even closer, what do you also notice? This is the mark of midnight. So I'm framing myself in a buy position below the weekly open. Now, fast forwarding in time, getting into Tuesday's price action. At 2 a.m. during London session, we had pound news, which dropped us lower, sent us a little wick, but we didn't create any more SMT here. And if you look at the same thing that happened during London session for EuroCAD, we had ourselves brewing a potential classic buy day, London creating the low of the day. So if you look on EuroCAD and you look at GBPCAD, what do you notice as similarities? How we talked about this being a long-term low, short-term lows being created here, intermediate term low, swept, price pushes up higher. The same thing happens here. We create SMT. This is our labeled long-term low now on EuroCAD. We had a short-term low that gets violated during London, and then price pushes up, closing above the swing high. And we have a small hourly bullish fair value gap that is a short-term low to the right of the intermediate term low, confirming this as a run on buy stops. Now, what I did was share, actually on my Instagram, I do these every week, I give out my top watch. I tell you guys what I'm looking at on the higher time frame, if there's SMT divergence, and validation and invalidation points. And for me, what I said for us was I needed price to close above this swing high, confirming this up close candle as a bullish breaker block. And that was our validation point for more confirmation for a long position. Obviously, I wasn't going to share this execution because this is more advanced. This would be the more so confirmation for others to execute on to capitalize on the position to go long off the breaker to the internal to external range liquidity pool draw, resting it here at 172,400. So if you're looking at price before CPI data release and you have a daily candle formation to the right, you're understanding that you want to position yourself in the wick, not in the body, just like how I did position myself in the wick of the weekly candle and not the body. You could enter off of that breaker block and put your stop loss right below that intermediate term low because this created SMT divergence. So in my eyes, this is a protected low, and I'll be more than comfortable letting my risk go on here for price to deliver from the internal to external range drawn liquidity because we had market structure aligning itself with the draw. And I'm happy to say that as easy as it was, this was not a hindsight trade. I called it out before price even did anything, and a bunch of people throughout Twitter or even Instagram were able to capitalize on this move, and I'm very happy to see that people are actually understanding the ways of price delivery and how I'm portraying it. We had CPI deliver to our expectation because we had the proper stop loss, we had the SMT. All of the stars were aligning ourselves to position a long position to that external range drawn liquidity. And you can even see when you position yourself in the wick, you are a part of the distribution being price delivering through the body to that external range high. And the same thing is for me when I positioned myself at the intermediate term low at the stop run, I was in the wick below the weekly open. And that is literally what you can see here where I framed my trade. But now you guys can honestly see, like, I look for a certain set of things, and if I don't get what I need, then I will get no trade. Like, my main two things that you guys should honestly be focusing on is waiting for price to reach a higher time frame key level, and then after price reaches that higher time frame key level, you need SMT divergence at that internal or external range liquidity pool. Because once you get that, those two things, you can then drop to the hourly or the 4 hour to frame an entry on one of those two time frames. As time goes on, as I post more and more trade breakdowns, you guys will see how simplistic it is and how you can easily anticipate price delivery even before a high impact news driver, like I just did here. Now, I appreciate you guys for sticking around to the end of the video, and if you did, I hope you found value to it. And a lot of people are asking me about my Discord and what's going on. I do have an announcement with 2 other traders that I will be working with and collaborating with throughout the month of May, and it will be a very, very in-detailed group for people that are willing to work and actually put in the time to see proper results and executions like you've been seeing already for the people that I've been reposting online. Stay tuned for that. I'll provide updates throughout all my social medias, but be safe, everybody. Hope you enjoyed again, and I will catch you guys next week in the next upload.